Two of the hottest topics in the wealth management business right now are alternative investments, looking for other types of investments for your clients, and Fintech, how Fintech is completely changing the landscape of wealth management, not only in Canada, but around the world. So who better to talk about these two topics than Paul Desmarais III of Sagard? I can't wait to hear what he has to say. So welcome to another season of Turning the Page. I really can't believe this is actually our fourth year of a huge amount of great conversations. We've had the movers, we've had the shakers, we've had the thought leaders, and a whole bunch of innovators in our industry. And I thank our audience so much for being here throughout our whole journey here. And we have some exciting things coming up for this next year. Now, over the course of the show, we've talked about a lot of different topics. And one of the topics we dive into is different investment strategies for clients. This comes up all the time, and it's an interesting type of conversation that continues to evolve. The other thing we talk a lot on the show is the whole Fintech industry and how the industry has completely changed because of technology and how we can really effectively service our clients better because of the investments and the new technology that has come out. You know, we're seeing both industries having enormous growth, and we're seeing new applications come out almost every week. So I thought, well, to better understand both of these topics, I'd go right to the top. I'd have wanted to chat with somebody who not only I've known, but admired for many years for all of the different businesses that they've been involved in. I've personally been a partner with his family for quite a long time, almost 20 years now. So today, to talk to us about these two very interesting topics, I actually have Paul Desmarais III here joining us. So thank you, Paul, for coming in.
It's my pleasure to be here, Chris.
I'm so glad you're here. And for those who don't know him, I'll do a quick introduction, as quick as I can possibly be, let's say. He's the chairman, CEO of Sagard. It's an alternative asset firm. It's active in venture capital, private equity, credit, real estate. Paul has led Sagard since 2016, along with a handful of close partners, and they're all bound by a common vision: build one of the best performing investment firms globally. Sagard has experienced outstanding growth, and now they have assets of over $30 billion. Under Paul, Sagard has built a global network of expertise that helps companies lead, embrace, and stay ahead of disruptive trends. They've expanded in North America, they've expanded in Europe, they've gone through the Middle East, and some of the best technology that you and I have heard of that have come out of Canada and actually around the world have been led by Paul. You know, they've done things such as Wealthsimple, very common name now, Coho, Nesto, Dialogue. You know, some incredible entrepreneurial plays have come out of this company. Sagard Saint Animal, the creation of Kilatu, it's a French equipment rental champion, and Alan in the insurance space in France. For those who don't know, I've read articles on this. It's very interesting, and it's interesting read. You know, within the Sagard ecosystem, he's the executive chairman and co-founder of Portage, which is a fintech and financial services company. They invest in and build up these companies. Chairman and co-founder of Diagram, which is a venture builder. And within the investment portfolios, he's the chairman of Wealthsimple, Novisto, Sagard Wealth, and the director of Nesto and Midas. He's done a lot of stuff here. So once again, Paul, thanks for the show. Thanks for coming to the show. This is going to be a great discussion, I think. But why don't we do it the way that I always do it? Let's start at the beginning. How did you get here? You've been involved in so many great things. How did you actually get here?
Thank you for that introduction, Chris. Really kind of you, and really amazing to have worked with you and your entrepreneurial journey for over 20 years. One of the things I like to say is that an entrepreneurial journey is rarely a straight line, and I'm sure it's something that you could relate to. And mine has taken many twists and turns, but every stage of life has brought something. And what I often tell people is, think about the stage of life that you're in, and think about what you're looking to accomplish in that stage, because each one of those steps ends up, building the staircase that, leads to that, journey to the top. So my journey really started in high school, a place called Lakefield, very important for me, Lakefield College School in Lakefield, Ontario, outside of Peterborough. It's a place that gave me confidence. I was a very introverted kid. Had never really found myself in middle school. And this high school really helped me identify my strengths and kind of blossom and gave me the confidence to basically pursue a lot of different things going forward. I then, from high school, went to Harvard. And Harvard really taught me curiosity. It taught me a desire to learn. And for those of you who understand, the investment space, one of the key skill sets to be a good investor is curiosity. And Harvard played a really important role in doing that. Following university, I began my career at Goldman Sachs. I spent 5 years at Goldman Sachs. Those 5 years were really, really, really important. I often tell people your 20s are a time to build the foundation of your future career. And to build that foundation, learning kind of hard skills is really important. And at Goldman, I really learned things like rigor, things like financial modeling, financial understanding. But also one of the things that Goldman gave me was a network. You might think, right, coming from a family like mine, I'd have, a pre-established network. But the reality is that, your father's network or your grandfather's network is not your network.
Right.
So building my own network identity at Goldman was really important. INSEAD, I did my MBA at INSEAD, which was really important. I wanted to go internationally because I really wanted to get a global sense of business. And INSEAD is an amazing place in that it's probably one of the most diverse schools in terms of nationalities in the world and exposed me to people from around the world. And following that, I really began my journey in our family business. I started at Imerys in France, which is the world's largest industrial mineral company. And there I actually managed our supply chains in South Africa and Ukraine, which was a really formative experience. And what I learned there was that what you model in a spreadsheet is not exactly what happens in real life.
Not reality.
You can model Ukraine all you want, but what happens on the ground in places like Ukraine and South Africa is very different from what would normally happen in places like North America. Following that, I joined Canada Life, and this was the first time I joined a group company that's very close to the holding.
Right.
And what was interesting there is that I realized that being a family member in a kind of large controlled company like Canada Life is challenging. And it's one of the pieces of advice I give to family businesses is, it's always better to allow your children to train and learn about what they're going to do outside of the family business. Because sometimes it could be very challenging for people to manage, a member of the kind of shareholding family inside the group. And so that was an interesting experience. It was also an interesting experience in that I was part of the risk team at Canada Life, which is actually one of the best seats you could ever have to understand a financial institution, because you have to understand all the different products, all the different exposures. And my role was actually to report on a lot of the risks to the board, which was actually an amazing seat for me to learn all about Canada Life. Finally, I joined the holding. At first, joined a lot of the boards of the companies that we own or control, and then realized that ultimately I wanted to pursue an entrepreneurial journey. I wanted to build something of my own, and that's when the opportunity to really build what is the Sagard of today came about. And so in 2016, I had a sit down with my father and Jeff Orr, who now leads our family group, and basically walked them through what my ambition was. And they set me on the path to build, what is now Sagard, but also the path to develop a lot of our vision in Fintech. And so that's where we're at today.
I love it. That's quite a journey, and I'll pick up on the one thing that you said, which I seem to see as a commonality, which is that natural curiosity, that natural you want to learn more, and as you learn more, it just brings you to that next vision, and then to the next vision. So it's never, to your point, I don't think any of us got here in a linear fashion, that it just went from A to B to C. It was more, I got to A, so I got to B, then I saw something completely different in C because I read a lot and I was curious about E and F, and that got you there. And I think, a lot of our people who are listening, always think it's, A, either easier than they think it is, or B, it's just, one thing is this grand vision that you take off on and somehow you get there. And it never is quite the case, is it?
It's everything but, in fact, once I got going, the first investment I made was a disaster. We ultimately ended up losing all the money. And that was very humbling, right? Because I'd come from an investing background. This was my beginning. And I learned a lot from that mistake, and it's a mistake that I bear the scars of. Like when you're an investor, losing money is literally the worst thing in the world. And so the key is when it happens, you just got to sit back and learn and figure out what you did wrong. But then, luckily, our second investment was Bauer and the privatizing of the hockey company, which was a huge success. And then the third investment was Wealthsimple, which obviously has been a real winner. And what's interesting is that many of the investments that we made after that ended up being, pretty remarkable successes, and so we got very lucky, and that's also important. Not only is life not a straight line, but actually luck plays a really big role in your success long term in terms of who you meet, who you get exposed to, what macro events happen that impact positively or negatively your companies. There's a lot in life that you don't control. And so what I often say is you got to position and prepare yourself for luck. And that's something I spend a lot of time doing. And interestingly enough, once again, curiosity plays a really important role in positioning and preparing you for luck.
Right. Right. It's the prepared mind comes. That's where luck comes from. But I was also pondering as you were talking that you made that mistake up front, and it's probably because of that mistake you probably learned so much that the next ones you knew at least what not to do on a go forward basis, and that probably put you in a much better position than a lot of other people who were looking at different investments or different spaces that they were going to invest in.
Absolutely. I mean, the reality is that if I distill the first mistake, I did a lot of work on the macro. I did a lot of work on the industry fundamentals and the business, but I probably did not do enough work on the people. And the reality is that business is about people. And what we did extremely well in the next investments and, most of our investments thereafter is that assessment of people and that understanding of what motivates the people that you're partnering with and how are you going to form that unique partnership is really important in the success of an investment.
I think you said it. And some of my heroes are Warren Buffett and Charlie Munger. They always talk about, it's always the people. You can have the best strategy, but if you don't have the right people and the people that you trust that are going to do the right thing, both for you and for your customers, very hard to run a business. So I want to get to you're working on something I find very, very interesting now because the world of investing is changing. And you guys are in now the alternative investment space. And as much as you hear about this, and you hear probably more about it in the US than you do up here in Canada, but it's not really well understood what it actually means to be in the alternative space. So I have a couple of questions, and one is why focus on that space right now? Why do you think it's important that people look at alternatives for their portfolios? And who are the types of clients that should be considered? I got a lot of people in the wealth management industry that listen to my show, and they're probably thinking, like, how would this fit into my business, and why would it fit in right now?
Well, let's start from the top. So firstly, what is alternative investments? So
Right.
alternative investments, when you think of the traditional portfolio, 60% stocks, 40% bonds, or 60% bonds, 40% stocks, that's the traditional kind of asset class mix. Alternatives is everything else. And the reason why alternatives is important is a majority of companies, a majority of entrepreneurial journeys are private. They're not
Right.
public.
Yeah.
They're not available to the everyday investor. And so one of the beauties of, the alternative asset class is they are a way to get capital to entrepreneurs. They're a way to finance things that the traditional markets do not finance. And so why do alternative assets exist? It's really a packaging of, the financing of a majority of the economy. And historically, this is an asset class that was only available to large institutional investors, pension funds, endowments, foundations, and really large family offices. And what's happened in the last decade is there's been a revolution in the space from a kind of technology layer that has enabled these assets to become available more broadly. The democratization of alternatives. And the democratization of alternatives is one of the themes that we at Sagard are the most passionate about right now, because we think that for people's retirement, like when people say, hey, diversification is the world's only free lunch, the reality is that historically a large portion of society didn't have access to that unique asset class that helps diversify a portfolio and leads to better outcomes, ultimately. And so, it is an amazing diversifier. It is also a space where, because you're investing in smaller companies and because the people that you're investing with are often experts at what they do, like the teams that we have at Sagard, we have repeatable playbooks, and those are playbooks where we're able to go in and actually create outcomes and create value by using our global network, by making introductions, by bringing very specific technology expertise to our portfolio companies, by pattern recognition of saying, hey, we're investors in one CEO that's doing this, maybe you should try that as well. And that ability to have a direct impact on performance is really important because, for those of you who are very familiar with public markets, people often talk about market efficiency and things like rand. In the world of alternatives, you could actually manufacture your own returns by bringing value to your portfolio companies in a repeatable way. So that's really exciting.
That is exciting.
But that the counterpoint, and it's something that's really important, especially for kind of more a wealth segment investors, is to understand the problem with alternatives is they're not liquid, and so you really need to understand what are your liquidity needs as an investor, and make sure that you match those liquidity needs with the illiquidity of this asset class. And so this is one of the biggest impediments to broader adoption in the space. And the industry is evolving around that and building new vehicles like these evergreen funds that we've launched in Canada, but also many others have launched. That technology is facilitating a little bit more liquidity, but it's always important to remember that the underlying here is illiquid. And so you should only invest in this asset class if you have no need for your capital long term. And so that's, what are alternatives? Why do they generate value? And, maybe, a little note of warning on some of the risks.
Well, it's a good description. And if you think about it, small companies become big companies. And to your point, in the big company space, there's only so much synergy. There's only so much growth. And, there are the Magnificent Seven and all of those that people look at. But what you're describing is in your space, you find these little nuggets of companies that you can create value in, and they can have above average returns or the capability of above average returns. But like all private companies, and I think this is what you're trying to get the investor's head around, there is some liquidity there. It's not like a public company. You can just put your shares back. Someone's going to buy it for whatever the price is at that particular time. There's got to be some sort of event that gets that liquidity. So, with that kind of context, who are the clients that generally buy these types of things? Like, to your point, in the traditional sense, it's always been the big institutions who don't need liquidity, family offices who don't need liquidity. So now who are the clients that A, have and B, should?
And so historically, And still today, by far, institutional investors are the largest allocators to the space. So if you look at the Canadian pension plans or university endowments in the United States, they will have allocations to alternatives that'll range between 25 and 40% of the portfolios.
Right.
Those are really big allocations, but they can make those allocations because many of these investors have very long-term liabilities. And so they can match these, assets that capture a liquidity premium against those very long-term liabilities, because many endowments and foundations, they're investing for money that they only need 15 years from now. Now, the wealth segment individuals today have very little alternatives exposure. And so generally the way I would describe it is these are assets that make sense for qualified or accredited investors, people that have a significant amount of capital, people that do not need liquidity for like a rainy day event.
Right.
Often they're individuals that put this in their registered accounts, because ultimately those are accounts that you tend to be needing access to less. And so that's generally the standpoint. What I would say is that if you're looking to accumulate for a very long period of time, a robust allocation to alternatives makes sense. If you are an extremely wealthy individual, $50 million or more of investable assets, then, a very healthy allocation to alternatives also makes sense, because the odds of you needing that money for a rainy day event is very low. And so generally, the way I would think about it is that alternatives make sense for investors who have excess liquidity above their needs for, let's say, the next 3 years. And those are people that it makes sense to have an allocation. And depending on your level of wealth, you should probably start with a small allocation. And then as you get wealthier,
Right.
you can have a larger allocation.
Move it up. Well, Sagard, you guys started as an institutional manager, and now you've entered sort of the private wealth space in the Canadian marketplace. And so I'm going to assume that's what's driving that. So, to verify, now it's sort of that private wealth, these people who are getting richer that want to allocate more into that alternative space. That would be correct.
Yes. So the democratization of alternatives is one of the 3 priorities of Sagard today. And we really believe that alternatives are going to play an important role in securing the retirements of Canadians and of people around the world. And so we've launched products in this space in Canada, and we are in the process of launching products in the US and in Europe. And we believe that these products are going to play a really important role in building people's portfolios, because if you think about, if you're in holder of just a Canadian index, right?
Right.
You have way too much exposure to materials, to oil and gas, and to financials. The Canadian index is really those 3 sectors. That does not make sense in terms of a portfolio allocation. Today, if you're an investor in the U.S. index, the Magnificent Seven are playing a huge role in driving returns. Does it really make sense to have a portfolio that's exposed to 7 stocks that are all effectively playing a similar theme around AI? No. And so ultimately, the addition of alts in those portfolios, I think, will help stabilize returns over the long run, and actually play a better role in outcomes, because everybody knows that one of the reasons why advice is really important and why portfolio construction is really important is it actually protects people against making bad decisions in moments of volatility.
I like it. So what, you guys are involved in all kinds of different exciting projects right now. What really excites you these days? What, if you have advisors, what should they be paying attention to in this space right now?
Oh boy. Well, I did mention that curiosity is a big part of who I am.
Right.
And so there's a lot of things that excite me. But one of the things that at Sagard is our second priority is actually AI, and how AI is going to transform businesses everywhere. And what's interesting is that we at Sagard specialize around a few industries: financial services, business services, healthcare, technology. These are all industries that are ripe for adoption of AI, and so we've built a center of excellence at Sagard to help Sagard transform itself using AI, but also help our portfolio companies transform themselves and also help our large institutional investors transform their businesses. And so this is a group that's in very high demand and it's really exciting. I look at how my daily life is changing with the use of AI tools, things like Notebook LM, things like ChatGPT, things like Granola. These things are incredible and are huge productivity boosters in my life. And if you multiply that by the 450 other people that work at Sagard, I think as a firm we could really kind of step up and go after that mountain that I'm after in a much more efficient way. And so very excited about AI, but also very excited about like what we do. Like our bread and butter is, investing in great businesses that have real moats around them that we could help build. What I often tell people is my life objective is to have a meaningful impact on 1,000 entrepreneurs, and for 1,000 entrepreneurs to look back in their life and think, wow, meeting and partnering with Sagard was one of the best things that happened to us. And so that is something that excites me, and everything I could do to help those entrepreneurs build their businesses is something that gets me excited. And by the way, those entrepreneurs include financial advisors, because financial advisors are entrepreneurs. They're often building their businesses. And so what I'd be focused on as a financial advisor is how can I adopt technology quickly to make myself more efficient to serve my clients? How can I use the latest tools to have greater visibility on my clients' needs and be able to make better recommendations as a result? And how can I make sure that I'm building diversified portfolios for my clients so that in a world where technology is changing at an increasingly rapid pace, right? If you think of the number of concurrent technology innovations that are happening at once, from, satellite to AI to robotics to blockchain and digital currencies, all these things are all happening at once. And what's crazy is that like innovation happens when ideas collide.
Right.
And all those are big ideas colliding. And so you're going to see an explosion of additional innovation that's going to come out of this. And so I'd be making sure that I'm building very diversified portfolios to be resistant to disruption, but also exposed in a positive way to all that disruption.
Oh, I like it. I love the mission. The mission. Like, how do you help entrepreneurs? And if you can help 1,000 entrepreneurs, think of how that changes the world, how it changes people's lives for the better. Right? Everything that we enjoy as consumers come because an entrepreneur had the idea of how to make it better, faster, cheaper, any of those things. I think that's a worthwhile endeavor. And you get to work with a lot of entrepreneurs. You get to see a lot of personalities. You get to see a lot of success stories. If you had to distill it down, and I get a lot of entrepreneurs that listen to the show, what are the things that you sort of see or you look for that you're like, yep, this is going to have that level of success. This is somebody, as an entrepreneur, I can believe in, but this is the kind of business that I would believe in and I would back, because you have a much broader exposure than most people would have in their lifetime.
I think often the mistake people make is that they think of ideas that are too small. And so what gets me excited is a big idea. Like, is an idea that like, hey, we're going to consolidate this huge industry. It's extremely fragmented. And these are the reasons why we're going to build systems that are going to make us and give us the right to win in consolidating the industry. That's right. When someone comes to me with something like that, that gets me excited. Or like, what is the right to win is in general the question I'm often asking about a specific company. But the reality is, like, you could have as great of an idea as you want. Success is about people. It's about people.
Always people.
And one of the things that that really is the connective line in terms of the people that I like is, storytelling ability. And why is storytelling important? Storytelling is important because you cannot build something on your own. In order for you to build something, you need to attract people, okay? You need to attract investors. And you will not attract people or investors if you're not good at telling your story. And one of the keys in telling a good story, and this is the third thing that is really important with entrepreneurs, is you need to be authentic and you need to be passionate about the idea that you're kind of building. And so when it comes to like an early stage entrepreneur, the question is, can this person attract a team?
The right team.
Attract dollars? And is this person so passionate about the problem that they're looking to solve that they can't sleep at night? Because ultimately, if they have the passion that they can't sleep at night and they're good at storytelling, the reality is they'll probably attract dollars and people, and it'll be a great success. You know, one of the people that was so good at this is Michael Katchen, right?
Right. Yeah. Wealthsimple.
Like Michael Katchen, the founder of Wealthsimple, is actually, I would nearly say, in my life, one of the best at this. Very early on, he surrounded himself with a great team of people. Actually, one of the people he surrounded with himself with was his former, boss at his old company. He very quickly surrounded himself with, some of the leading minds of financial services in Toronto who were investors in Wealthsimple. And he had a very simple story. He's like, I am going to democratize investments for Canadians, and I am going to do it cheaper and better. And that is a very powerful story.
Right.
And it's a story that really appeals to a certain segment of Canadians. And so that ended up working. And again, Michael had the three things that I look for in entrepreneurs, which was, ability to attract people, money, and storytelling. And then he had a big idea. It was like, let's go after all these Canadians that today don't have enough money to be served by advisors, or are just like too young, or just can't relate to what financial advice is. And that segment ended up being a really big segment.
It was a great success, and I know Michael, and he does have all of those things. Like he's a great storyteller. You can sit there and listen to him. And it's funny. So we're moving into the sort of the fintech space, and we hear a lot from our listeners about fintech. How do you spot opportunities? Like, what do you look for in those disruptors? And is there anything right now that you see that's super cool?
Yeah. So what's interesting is like fintech 1.0 was a lot of B2C.
Right.
Fintech 2.0 is a lot of helping large financial institutions transform their ways of doing things and bringing them technology that's going to make them more efficient. And so if you look at things like conquest planning that you guys are
we use it. Yep.
If you look at Nesto, which is taken over the kind of mortgage origination and a back office for groups like Canada Life and IG, these are incredible leaps forward in not only advisor experience, but it's also client experience, and it ends up being way more efficient for the incumbent financial institution. And so it's win-win-win. The advisor wins, the financial institution wins, and the client wins. And you're seeing more and more technology like that emerge where a lot of incumbents have allowed a lot of technology debt, so underinvestment in technology build up over time. And what we're seeing now is a major wave of investment and modernization by large financial institutions, and that's getting us really excited. I mean, if you look at our early investing in fintech, it was a lot of B2C. Now it's a lot of technology to serve financial institutions. I also think what's going on in stablecoin is really exciting. The impact of stablecoins on international money flows, on business to business transfers, is going to be really interesting and meaningful. And so that is a space that we are spending a lot of time on. We're also very interested in everything that has to do with embedded finance. The idea of having the financial service embedded in the client experience, for things as easy as, buying a bike. When you think of the checkout where you now have the option to buy, pay now or buy now, pay later, or the opportunity to buy insurance for your bike at checkout, that embedded finance in everything, I think is something that's very exciting. And so those are all things that get me excited. But you also ask, how do we find these things?
Yeah.
the reality is that, that's our job. I travel 250 days a year. I am on
Holy,
the road.
I bet.
And and there's one thing that's for certain is that you will never build relationships with people, with anybody who's entrepreneurial, by being at your desk. Like
Right.
you got to be on the road. You got to be going to visit people. You got to be using networks like LinkedIn to constantly be reaching out to different people. I use LinkedIn so often that LinkedIn often kicks me off of LinkedIn because you're only
You've
allowed
overused it.
you're only allowed to send 500 messages a week to LinkedIn, like on LinkedIn, and I often exceed that limit. And so they take me off the platform for a week. But it gives you the sense of like the level of hustle that's needed in order to identify and find these entrepreneurs like Mike Katchen, like Malik
Right.
Yacoub, or like Jean-Charles Samuel, who founded Allen in France. Or now, I sit on the board of the Wealthsimple of Turkey, which is a new wealth business that we're building in Turkey, which is basically following a lot of the Wealthsimple playbooks in Turkey, but achieved 1 million clients faster than nearly any company I've ever seen.
Wow, that's super cool. So if you had to give, let's say, one piece of advice from all that you've learned to our listeners, what piece of advice would that be to be a successful entrepreneur? And I'm going to discount the ones you've said because I'm going to hopefully that they have learned that lesson. So if you had to distill it down, what would it be that they should just grasp onto? And I certainly have my opinions, but I would certainly love to hear yours.
So one of the really important things that I've learned over time is you really got to identify your client segment and your clear value proposition for that client segment. And when you're, for example, a financial advisor, understanding exactly like what type of client are you going after, and what are the ways that you're going to differentiate your service offering relative to others in order to differentiate yourself relative to that client segment.
Right.
And I think in a world where so many plain vanilla offerings are available, thinking very clearly about like what is the set of services that I am going to focus on bringing that perfectly match this segment is really important. And we found that throughout our portfolio companies, having a very clear vision of your segment and your value proposition for that segment is probably one of the most important drivers of success. And what you end up finding is that it makes your product roadmap a lot more simple, but it also makes your customer acquisition a lot cheaper because you end up continuously launching services that speak very directly to a group of people. And so that would be, the number one, piece of advice beyond, it's about people, it's about storytelling.
Right.
I'd say the third is it's really about identifying what is your client segment and what is your value proposition for that segment.
I think that makes a lot of sense, and I hear that a lot. I have a book, and one of the chapters is not everybody's your client, and that's one of the mistakes I see that many do is they try to be, to your point, too vanilla to too many people, and you end up to be nothing to nobody as opposed to being very, very concentrated. Because once you can satisfy that segment, to your point, you just keep going. And you know everything about that segment, so you know every problem that you are able to solve. So I think that is great advice.
Yeah, exactly. I mean, just recently I met with a financial advisor focused entirely on technology executives. That the minute he said that, I got excited. I was like, wow, you've told me your client segment. I have 5 ideas for you on how I'm going to help you go after that segment. The problem is when an advisor comes and sees me, well, it's like, I serve everybody. Like, I don't know how to help.
Right.
But you tell me I serve technology entrepreneurs, there's 5 things I could do to help you. I serve dentists, odds are there's something very specific that I could do to help you there too. And
Right.
so the more segmented you are, and actually the more you share your dilemma, this is another really important lesson. Share the dilemma. Because ultimately, the more you share your objectives, the more you share your challenges, the more people can help you, and it's incredible. when you share your challenges and when you share your objectives broadly, this is something I do at the beginning of every year. I have a list of the 100 people that I believe are I call them super connectors.
Right.
I make sure that in the first quarter of the year, I share with them my annual objectives. And what's amazing is they will often come up with ideas, even though they've got nothing to do with the industry I'm going after. They'll come up with value added ideas that'll have a big impact in helping me meet my objectives that year.
Well, I love that idea. I'm going to do that. I'm stealing that one for sure. Of everything that one I'm stealing. So what's next? What's next for Paul Desmarais III?
What's next? Again, I'm an extremely curious person. And so I'm going to spend the next 12 months really focused on how do we adopt artificial intelligence in Sagard to make us better investors and more efficient at what we do. That is a really important thing. Retailization of alts is a massive priority. In Canada, we made great traction. We're now going to enter the US and Europe. I think we have a highly differentiated product offering because if you think of the leaders in the space, the Blackstones, the big brands, they're really focused on the mega caps. They're focused on, a lot of large deals. We're truly a firm that focuses on the entrepreneur, that business that has less than 100 million of EBITDA. That's our sweet spot. That's where we can impact. And that's highly complementary to what a lot of other firms offer in the wealth channel. And so we're going to keep on doubling down on that and be the world leader in that space. Like that is our mission. Like we are going to be the world leader in middle market investing. And that's something that we're very passionate about. And so that's really what's next. And then continuing to meet great people, attract great people, partner with great people, and just keep on grinding at that goal of like having 1,000 people look back at their lives and believe that the best thing that happened to them is meeting Sagard. And that's a grind because 1,000's a lot of people. Today we're at just over 100.
Right.
And so hopefully it's exponential growth so that I can move my goal from 1,000 to 10,000 to 100,000 would be, the ultimate goal over time.
Well, exciting times. I love it. So now in this segment of the show, I just do what I call a rapid fire. I got 3 questions for you. And when I ask you the question, it's just whatever pops into your head. And the first question, I always love this question. What is the best advice anyone ever gave you?
Great question. And, my childhood hero was David Rockefeller, and I was able to have lunch with David Rockefeller. And David Rockefeller told me something that was really important. He told me, focus on what you could impact, and what you could impact will grow. And that's so important because as a child, you get distracted by everything that's happening around you. And you read the newspapers and you could easily get yourself in a panic. But by staying exclusively focused on what I can have an impact on and things where I can move the needle, that will end up driving success. And with success, the amount of stuff I could impact can grow. And that's been the best piece of advice I've received. I got that piece of advice 20 years ago, and it is still by far the best thing anybody's ever said to me.
I love it. I'm going to take that one. What is the best business book you've ever read? Sort of Bible.
So people that know me know that I love the book Never Eat Alone by Keith Ferrazzi. It is literally my Bible. And for any of you who is in a business where, meeting people and building networks is important, this is mandatory reading. A book I read this year that I really loved is, and this is really valuable for all your advisors, is Unreasonable Hospitality by Will Guerrero, who is
I've never read that one. There's a good one.
Yeah, the maitre d' at 11 Madison Park, who ended up getting ranked the best restaurant in the world. And it is the story about how he delivered the best client service in a restaurant in the world and how he did that. And I think that in any industry where you're in the business of delighting clients, I think Unreasonable Hospitality is a must read.
I'm going to go out and get that today. I'm always looking for a new one. And finally, and although I think you mentioned this, but just to really make a point of it, how do you want to be remembered?
How do I want to be remembered? impact of entrepreneurs. I want to have moved the needle for the Canadian economy by having impacted so many entrepreneurs. But even beyond the Canadian economy, I want to move the needle in every place that we operate at Sagard and be viewed as a member of the community that helps build leaders, helps build great companies, drive employment, and then give back to the communities and basically create a better world through capitalism.
You know what? That is a noble cause, and one that I think that most people can get behind. So it's going to be something that you will be remembered by. So this has been great. Thank you so much, Paul, for being on the show. We've learned. I could really actually go on for hours, but I know you probably got some business people to talk to and some businesses to invest in. But I'll tell you what I learned out of this. I learned the alternative space is something that people should be definitely looking at. It was generally only for the high net worth and institutional. Sagard is bringing it down so that you can make it part of the allocation for your clients, especially your high net worth clients. We talked a little bit about the fintech space and how it is really changing, not only the B2C, but now the making businesses more efficient. And, as you're an entrepreneur, you should really look at this. Entrepreneurs, if I got one thing out of it, entrepreneurs should be good storytellers. They should be able to tell the story from an investor's point of view, from a client's point of view, from a team's point of view. They surround themselves with great people because they get people to buy into that story, and they get to take it away, and no one can do it on their own. So if you're passionate, you have a great story, and you get a great team around you, you can make things happen. And what advisors should pay attention to is the changing. I love also they should pay attention to who their market is and becoming everything to that market, and not trying to be vanilla and being everything to everybody. I think these are the great lessons that I've learned out of this, and hopefully everyone who is listening have learned as well. Paul, anything to add? Anything that you'd like to say? If people are interested in Sagard and would like to see how it fits into their maybe recommendations, how would they go about that?
Look, we have products that are today available to the Wealth Channel in Canada. They are coming to the United States. So we are approved on now, I think, 12 platforms across the country. We're hoping to be approved on many more. And look, I mean, again, we are looking to build companies, and when you invest in Sagard, you are helping us in our mission to drive innovation, to drive growth through entrepreneurship, and we believe that we're building a platform that is best in class at it, and are really excited to partner with you in building your business and bringing that service to clients, because I think it's an important part of clients' portfolios. But again, these are long-term bets that are illiquid. And so you always got to make sure that you weigh the positive with the negative, which is understand liquidity, and asset liability matching is always an important thing to think about.
That is great. Paul Desmarais III from Sagard. Thank you so much for being part of Turning the Page. Any final words for our audience?
No, just keep on building.
All right. Great words to end the show with. Thank you again.